Yesterday, Jensen Huang said artificial intelligence will make intelligence itself a commodity, something available to billions of people. That one sentence rewires the entire demand model for NVIDIA, and the chart has already responded. There is one danger zone sitting just beneath this price that could trap late longs, and one hidden opportunity that traders are about to chase. I'll show you both before the institutional crowd does. Stay until the end because I'm laying out 3 exact entry and exit levels you can use now, from the sniper play to the aggressor scalp. This is where volatility becomes profit. My session bias is breakout watch bullish. We are trending hard on the daily and the 5-hour chart. NVIDIA is coiling near 220.78 with a clear path to test 226.95 and ultimately 231.60. This is not a fading environment, and it is not a range play. The trend is your mandate. The one invalidation level that proves this bias dead wrong is 210.13. That's the daily support floor and the line where the entire bullish structure resets. Right now, write this number down. 210.13. If we break and close below 210.13 today, the breakout narrative collapses and we flip to a wide range correction. But above it, every dip is a reload. The market has been handed a fundamental accelerant right when price was already pressing resistance, and that is a volatile cocktail. I want you to type that level in the comments, 210.13, and we'll see who's paying attention. That's your line in the sand. Let's walk the chart from the top down, because the structure here is textbook trend continuation and you need to see the moving averages working like a coordinated machine. On the weekly time frame, NVIDIA has been carving higher lows and higher highs without any meaningful bearish divergence for 6 weeks. Price opened this week above the 20-week moving average, which sits around 195, and the 60-week is near 155. The 200-week is way back at 85. Just to give you perspective on how far the long-term trend has stretched. Weekly MACD is above the signal line. Histograms are positive and expanding. The weekly is screaming one thing: do not short the trend, drop to the daily. This is where the infantry is positioned. The 20-day moving average is sitting at $215, and it has not been violated on a closing basis in over 2 weeks. That's your short-term bullish threshold. The 60-day moving average is around 200, and the 200-day is roughly 180. Price is trading comfortably above all 3 of those major averages, and the slope of the 20-day is accelerating upward. That tells you the momentum is not just present but strengthening. Yesterday we saw a strong bullish engulfing candle that swallowed the previous 3 days of consolidation, and that candle closed right on our current price of 220.78. The daily MACD is in positive territory above 0, the fast line pulling away from a slow line. No hidden bearish divergence here. Buyers are fully in control. Now the 4-hour. The 20-period MA on the 4-hour is near 218, and it just acted as a trampoline in the last session. Price dipped to 218.30 and ripped back above 220. The 60-period here is at 213. And that aligns almost perfectly with our first support zone. The 200 period on the 4-hour is at 210.50, which gives extra weight to that 210.13 level we already flagged. You now have a major moving average and a structural horizontal demand zone clustered right there. The MACD on the 4-hour is still bullish but showing a tiny loss of upside momentum. It's not a divergence, it's just a reset in the histogram, which is exactly what you want to see during a consolidation before the next leg higher. If the 4-hour MACD does turn flat here while price churns sideways, that's a reaccumulation signature, not a reversal. Drop all the way down to the 60-minute chart. Intraday, the 20-period moving average is at 220.10, almost mirroring spot. The 60-period is at 219.40, and the 200-period is at 217. We have a very tight moving average stack all pointing upward, which shows the trend is uniform across timeframes. The 60-minute MACD just printed a bullish crossover, suggesting short-term momentum is re-engaging. This is the kind of multi-timeframe alignment that aggressive breakout traders dream about. Now the key levels from your data. Immediate resistance sits at 226.95, which is a prior swing high from 2 weeks ago. Above that we have 231.60, the next structural ceiling and a measured move target. Off the last consolidation range. On the downside, support is layered at 210.13 and 206.37. 210.13 is the make or break zone, while 206.37 is the deeper base that bulls must hold to keep the weekly structure intact. I want you to think of 210.13 as the gatekeeper and 206.37 as the fortress wall. Between here and resistance, there's an air pocket. Price can run fast once it clears the 221 minor intraday pivot. And here is what most traders miss. The volume profile shows a low volume node between 222 and 226, meaning once buyers push through 221 with momentum, the path to 226.95 can be explosive because there's very little overhead supply trapped. That's the institutional playbook. Now connect this to the broader risk asset web. The S&P 500 is grinding higher, led by tech and AI-focused names. NVIDIA is not just a stock, it's the liquidity beacon for the entire growth complex. When you see Bitcoin ripping above 70,000 alongside NVIDIA strength, you're looking at a synchronized risk-on pulse driven by falling real yields and a belief that central banks will tilt dovish. The correlation between NVIDIA and the S&P 500 over the last 10 sessions is running at 0.89, and the correlation with Bitcoin is a surprising 0.72. That tells you this move is not isolated. It's being funded by the same pool of macro liquidity. If the US dollar index softens further, expect that trade to amplify because a weaker dollar lifts the valuation floor under US tech assets. NVIDIA is the tip of that spear. Here is the core news that changed the game. In the last 24 hours, at a global AI forum, Jensen Huang stated that intelligence will become a commodity and that NVIDIA's architecture will be the backbone that delivers it to billions of people. That's not your typical PR fluff. That's a demand forecast masquerading as a keynote. When a CEO of a company with a market cap of over $500 billion tells the world his product is about to become a utility, the street starts repricing immediately. Analysts scramble to update their terminal values because calling intelligence a commodity implies exponential unit growth beyond anything currently factored into consensus models. The options flow following those comments saw massive call buying at the 230 and 240 strikes for next week, and the SOXX semiconductor ETF saw its largest single-day inflow in over a month. That's institutional positioning speaking loud and clear. They are chasing this breakout. Let's cross-check with gold and yields. Gold is also pushing higher, sitting near 2,400, driven by lowering real yields and geopolitical hedging. That dual bid for both gold and NVIDIA tells you the market is pricing a soft landing with AI productivity gains, but still holding inflation hedges. This is a both engines running risk-on trade. If real yields continue to fall, the discount rate used on NVIDIA's future earnings drops, and the valuation expands. At the same time, the AI commodity narrative lowers the equity risk premium specifically for NVIDIA because the earnings become more predictable and utility-like. This is why you're seeing the inverse correlation between the 10-year TIPS yield and NVIDIA strengthen. Each tick lower in real yield is rocket fuel for the stock. Now the cross-linkage with the S&P 500 and Bitcoin becomes critical. We've seen the S&P 500 advance on declining breadth, meaning a few large-cap AI names are pulling the index higher. NVIDIA is the engine of that move. If NVIDIA breaks 231.60 and stretches, the S&P 500 likely pushes through its own all-time highs, even if small caps lag. Bitcoin is tracking Nasdaq futures almost tick for tick, and funding rates on perpetual swaps are neutral positive, meaning there's no extreme leverage yet. That suggests the risk asset rally has room to run before a positioning flush. The BOJ and US dollar to Japanese yen stability also feeds into this. A calm yen means carry trades stay alive, and that liquidity leaks directly into high beta tech like NVIDIA. If US dollar to Japanese yen stays bid without intervention fears, the global risk appetite stays elevated, and NVIDIA benefits. I'm watching the Nike 225 as a global risk barometer. If it holds gains, that validates NVDA's upside.my 1 to 2 week directional lean is bullish continuation above 231.60, targeting a leg into the 240 zone. The price event that would invalidate this thesis immediately is a daily close below 206.37. If 206.37 fails, the structural higher-low sequence breaks and a deeper correction toward 200 becomes base case. Another invalidation is a sharp spike in the US dollar index above 106 combined with a sudden risk-off in Bitcoin. That would signal a liquidity drain that hits NVIDIA hardest. For now, neither is on the radar. The next macro event that matters is Thursday's US inflation data. If CPI prints cool, the real yield argument strengthens and the AI commodity thesis gets an extra gear. If CPI prints hot, we could short-term wobble, but as long as 210.13 holds on any dip, the bull trend survives and the dip is bought. Keep your eyes on the video description. I list all these levels so you can copy them before the move. Most people will skip this section, but this is where money is actually made. Keep watching. I'm giving you 3 strategies designed for different risk profiles, with exact triggers, stops, and targets. No vague zones, just numbers. Strategy 1, the sniper. This is a conservative pullback entry designed for those who wait for the market to come to them. The trigger condition is a clean retracement into the 210.13 to 211.00 demand zone, paired with a bullish confirmation candle on the 1-hour time frame. I want to see a hammer or bullish engulfing that closes within that zone, and a MACD crossover on the 15-minute to add momentum confirmation. Your entry order goes in at 211.20 after the confirmation candle prints. Your stop loss goes at 208.50. Here's the logic. We are placing the stop below the 210.13 structural low and below the 200 period moving average on the 4-hour, giving it a $2.7 cushion to avoid stop hunting. That's a risk of around $2.70 per share. Target 1 is 220.00, which is just below current price and acts as a reversion to mean take profit zone. That's a $9 gain, giving you a risk reward of about 1 to 3.3. Target 2 is 226.95, right at the resistance barrier. That's a $15.75 gain, a risk reward of 1 to 5.8. Once target 1 is hit, move your stop to break even. This setup is voided if NVIDIA closes below 210.13 on the daily chart, because that would break the support zone and shift the trend structure. The sniper is your high precision, low patience play. Strategy 2, the active trader. This is a standard breakout continuation play for those who want to ride momentum. The entry condition is a 4-hour candle close above 221.50 with expanding volume. 221.50 is the immediate minor resistance from today's high. A strong close above it signals the low volume void between 222 and 226 is being entered. Your stop loss goes at 218.00, which is just below the 4-hour 20-period moving average and the intraday support level that held the last pullback. That's a $3.50 risk. Target 1 is 226.95. Netting $5.45, a 1 to 1.55 risk reward on the first leg. Target 2 is 231.60, adding another $4.65. Once target 1 is hit, apply a trailing stop of $2 from the current market price. This locks in profit while giving the second wave room to run. If price breaks above 231.60, trail aggressively and consider a third runner into 238. This setup fails if price reverses and closes back below 218.00 before reaching target 1, or if the 4-hour MACD prints a bearish divergence during the approach to 226.95. The active trader is about catching the expansion phase and managing it with structure, and here's an interaction cliff. Let's see how aligned we are. Type your NVIDIA trading range for tomorrow in the comments right now. I'm reading them. Are you seeing 210 to 231? Tighter? Wider? Drop your range and let's see if community sentiment matches the technicals. Strategy 3, the Aggressor. This is a high-risk countertrend fade designed only for those who know how to lose small and manage risk aggressively. The setup is a rejection of 226.95 on the 1-hour time frame with a bearish engulfing candle and a rising wedge pattern on the 5-minute chart. You're essentially fading the first touch of major resistance, betting that the first attack fails and a sharp pullback of $5 to $10 follows before the eventual breakout. Your short entry goes at 226.70, just below the engulfing candle's midpoint. Your stop loss is tight at 229.00, above the resistance and just past the node where breakout traders get stopped out. Risk is $2.30. Target 1 is 221.00, capturing the reversion back into the intraday pivot zone. That's $5.70, a 1 to 2.5 reward. Target 2 is 215.50, near the 20-day moving average and the last minor. Swing low. This is aggressive because you're fighting the daily trend. If momentum simply ignores resistance and sails through 227 without flinching, you're stopped out quickly. Do not use this strategy if you cannot accept multiple small losses. This is the night raid play, in and out within hours, never held through a major news event. Explicit warning, only for those with strict discipline, and never risk more than 0.5% of your account on this one. Never risk more than 1 to 2% of your capital on any single trade. No positions through high-impact news like CPI without hedges, and stops are non-negotiable. A plan without a stop is not a plan, it's a prayer. The most critical level for the next session is 210.13. As long as NVIDIA holds above that floor, the breakout to 231.60 is the path of least resistance, and AI commodity mania provides the catalyst. A daily close below 210.13, and we hit pause on the bull narrative and shift to a range-bound defense. Tomorrow, I'll be focusing on the US dollar index and the S&P 500 breadth divergence, because if the dollar cracks and breadth expands, NVDA's move becomes even more explosive. The Bitcoin and S&P divergence video is live now. I unpack the funding rate trap and liquidity grab that directly affects your tech trades. Tap the end screen to watch it next. Smash the like button if this NVIDIA analysis gave you a clear plan. Subscribe and hit the bell so you never miss a market-moving breakdown. This is Alpha Market Meridian, and I'll see you in the next one.